Yes. Statement by Minister Arun Jaitley ji. Yes.
Madam Speaker, I rise to make a statement on the issue of tax proposal for EPF superannuation fund. Some changes are proposed in the finance bill for the tax treatment of recognized provident fund and NPS. The purpose of the proposed reform in the tax regime is to encourage more number of private sector employees to go for a pension security after retirement instead of withdrawing the entire money from the Provident Fund account. Towards this objective, the government has announced that 40% of the total corpus withdrawn at the time of retirement will be tax exempt under both recognized Provident Fund and the National Pension Scheme. It is expected that employees of private companies will place the remaining 60% of the corpus in annuity, out of which they can get regular pension. When this 60% of the remaining corpus is invested in annuity, no tax is chargeable. This means that the entire corpus will be tax-free if invested in annuity. Only the periodic return on annuity will be taxable. The government in this budget has also made another change which says that when a person investing the annuity dies, when the original corpus goes in the hands of the heirs, then again there will be no tax. The idea behind this mechanism is to encourage people to invest in pension products rather than withdraw and consume the entire corpus after retirement. The main category of people to whom the EPF schemes are created are members of the EPFO who are within the statutory wage limit of Rs 15,000 per month. Out of the around 3.7 crore contributing members of the EPFO as of today, around 3.26 crore subscribers are in this category. For this category of people, there is going to be no change in any dispensation. However, in the EPFO, there are other contributing members who have accepted EPF voluntary, and they are employees of private or public sector companies. At present, even this category people can withdraw the whole amount without any tax liability. In the proposed amendment, there will not be any tax liability for such employees at the time of retirement if he contributes 60% of its annuity in any annuity product, so that the pension security can be created for him according to his earning capacity. However, if he chooses not to put any amount in annuity product, the exemption will be limited to 40%. A number of representations have been received from various sections of the society, including members of parliament, suggesting that this change will force people to invest in annuity products even if they are not willing to do so. The main argument is that employees should have the choice of where to invest. Theoretically, such freedom is desirable, but it is important for the government to achieve policy objectives by instrumentality of taxation. In the present reform, the policy objective is not to get more revenue, but to encourage people to join the pension scheme. There are various other suggestions received which can also achieve the same policy objective of encouraging people to join the pension scheme. In view of the representations received, the government would like to do a comprehensive review of this proposal, and therefore I withdraw the proposal in paragraph 138 and 139 of my budget speech. The proposal of 40% exemption given to NPS subscribers at the time of withdrawal remains.
Thank you.